technically 1 to 16 trade we took today. Essentially, what I was mentioning was how when I had entered late, therefore I had to enter off a mitigation. And the reasoning behind my entry here was very simple. It was a mitigation into a fair value gap, and I played the previous low. So pretty much I saw this mitigation first. I was like, interesting, might be good to go. And then I waited for a second mitigation to see if price was going to price efficiently. And off this reaction, we pretty much entered. Now I sent to Discord a trade that was a little bit lower than this to protect this demand, just in case price wanted to revisit this area. So I sent the Discord with stops slightly varying. But in essence, we had them higher. We had them about 50% of the zone. Something like this. I mean, I will show you guys the actual Discord sent. But the trade that we took was pretty much this. And the reason why I'm trying to explain this to everyone is because it's important that you know why this is. You're better off taking this trade and then the retrace into another PDRA because of the fact that the risk to reward you have here is insanely higher. Now, what do I mean by that? Instead of risking your full 1R, you could actually afford to risk half an R, right? For the same amount of overall profit. Because if this was the mitigation, you would have a 1 to 16 for final take profit and a 1 to 7 pretty much for your take profit 1. Whereas moving things here, right, well, half of this zone would have led you to get 1.5% when you secured, right? But instead of 1.5%, what did we do here? We pretty much secured, we risked 0.5%, but we were up. We pretty much secured 3.5%, which comes back to 1.75%. So this is like you optimizing for about 0.5%, 2%, but your overall risk is actually being minimized because in case price actually doesn't go there, what you've risked is far less than what you would normally do on the day. And you can still afford to risk a little bit more if there is a re-entry type of setup where price actually liquidates these lows and comes into this premium price point before actually expanding. So now we're in for half risk, or a little bit more than that, but half risk, and we're en route to 1 to 16, right? Half risk and 1 to 16 means that you can pretty much gain 4R, whereas having taken this trade, you'd pretty much be able to get about 3R. So you gained 1R, risked less overall. That sounds like a good deal to me, right? Because now you have more risk to put on for the day, right? Which we did actually. Now that reminds me, we took a trade on ES, which we really got beamed out of. So same idea as usual. Hourly time frame was bullish, right? And then 4-hour time frame was also bullish. Daily time frame was also bullish at the time. So I'm thinking we just continue. So I mark out 15-minute areas of liquidity, right? I noticed that we take all of this on NQ actually. I noticed that NQ sweeps this area of liquidity and then breaks 1 minute structure and revisits a fair value gap right here, right? I watch this, I'm thinking, okay, I can long. But to my knowledge, you're actually retracing. I felt like that was the case, but it was still in line with the strategy, so we took the trade. Nothing else, nothing more. It was a good trade to take, I guess. But at the end of the day, you live and learn is what they say. You lose some to win some more. So this trade we pretty much got beamed out of. Here is the setup itself. Saw a 1 minute break, revisit of the fair value gap, reaction onto the upside, entered, take profit 1 here, take profit 2 here, not that much RR, but has really good win rate. But you lose this, and we won the other trade on GJ, which is pretty much going to end up making us 4R. And yeah, that's pretty much the day. I'll see you guys in the next one. Join the Discord. If you do find these educational, make sure to just message me and get on calls with me. They're pretty much free. And we can get you going within your trading journey. I'll see you guys in the next one.